All righty, good evening, everyone. Welcome to the trade findings and adjustments for Tuesday, the 17th of not November. Yes, of November, excuse me. Rather interesting, I must say. It's days like today that make my year, and there's a short answer behind that. The short answer behind that is because when you have a down day in the stock market, and this is my personal belief, when you have a down day, well, let me put it a different way. Give me a quick second, though, to get this in here. My screenshots just took it. And so I now need to insert a text box. And I'm going to cut that. Cut. I'm going to stick it up on the other side. Okay, I guess it's going to go over here. So, my not so humble opinion, any down day in the stock market, gonna need to make that a lot bigger for my little eyes to be able to see that. Let's get this up to at least 14. Excuse me. All right. Any up day in the stock market is a day off for me. Kinda, right? Any down day in the stock market is a full day of work, usually from 5:30 a.m. until 9 p.m. at night. So that is the neat thing. The question is, how many up days? There seems to be a 2-to-1 ratio. 2 up days versus 1 down day. And that's in general. It doesn't mean it happens that way every week. It's probably more of a yearly average. So the short answer is by nature, right? By nature, we are bullish creatures, which means I get to have, and it's roughly 60 to 66% of my work days are days off. I love it, right? This is by nature what happens. With that said, if you're a fund manager, can someone please tell me how many days off are people that put you into a fund? How many days off are people that put you into a fund? Just shoot something. Every day off. There you go. I love it. 352. I love it. They don't work. I think that's hilarious. And I agree. I agree 100%. So I don't understand when people think this way in general. Why the heck are people still putting their money into funds that the days are days off for those individuals? Now, it's interesting because for me, I have to find ways to work a full 40 hours a week. In real life, to be 100% honest with you, I usually work somewhere between 28 to 32 hours a week. Until the hits the fan, and then I work more like a 60-hour week. And that's the general understanding. So I always get told, and I get told all the time, I want to do what you are doing, which means you have to have an education in the stock market. And I'm just going to start copying this because in all reality, there's a bunch of different things, which means you have to have a track record in the stock market, which means you have to have testimonials. Good spelling, Hurley. Good thing I went to college, huh? Of your track record in the stock market, which means you have to get licensed, bonded, and insured. Which means you have to pay roughly $10K to get a law firm to create your firm documentation, which means you have to have a law license, which is usually Series 65 or 66, which I also have my 7, 60, and 24. Which means you have to have people to give you their hard-earned retirement, usually / earned money, which means you have to perform in the stock market. There is a huge difference, and I'm going to say this as politely as I can. There is a huge difference between education and real trading in the stock market. I value the education of safe option strategies. I also know, and to Jeffrey's credit, he is one of the few and the first that will say, I don't do every trade. He doesn't have the funds to do every trade. He tries to do as many as he can, but there's a level of integrity with Jeffrey where he's going to say, you know what? I don't do that. He just doesn't. He can't. But he's upfront and honest about it. Credit to Jeffrey. I believe, you guys can correct me, he does open up an account and show his real trades that he is doing. At least he did for some point in time. I don't know if he's still doing that. But you know what's amazing? Today should have been a full work day for me. Today should have been, a comment just made, also in education, you're not using real money. With no emotion, it is easy. Ding, 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 ding. I'm trying to imply that without being an a-hole about it. Which means on a day like today, where the S&P is down half a percent, a negative 0.48%. When I can see in general that my education no Parker is up, I'm okay. Now that doesn't mean that every single one of you today is up in a down market. I then have to go through all 41 accounts. It's part of what I do on a daily basis, part of finding work to do. I go through every single day, every single account. And if I'm off by 0.5% on the market to the downside, I have to take a look at your portfolio and see where I'm over leveraged or what I'm doing wrong. If I'm within 0.5%, I leave it be. Sometimes I push that up to 0.6%. Occasionally, I also put it up to 0.75%, especially if I'm looking at a company like Boeing. And I think there's, let me see if there's Boeing people here. And there are two, and there's one Boeing person here, where when Boeing's just hitting the crapper, I was losing, or there was more than a 0.75 of a point difference in the S&P and that particular account. If there's a difference, it comes back to being able to say, let me, or can I, justify what I'm doing and explain it to you. With Boeing, the good news is I was in it myself. So when I'm in it myself, I'm okay. When I'm in it myself, if I can justify it to my wife and to me, I'm okay. I'm good to go. I'm in a good position, and I'm okay. I love an up day and a down market, and I can show you guys hundreds of days that are like this. So if I'm going to ask you, what does that mean? If I have an up day and a down market, just go out of the top of your head, what does that mean? There's always a consequence to every action, right? So if I have an up day and a down market, what does that mean? And Maud, are you remembering what, yeah, I'm not remembering what it was either. I'm sorry. If you don't know what it means, just type in a couple question marks. But I'm having an up day and a down market. What does that mean? I love you, Dave. Dave says, you're awesome, and that's why I use you. I'm sure Bill will come in here as well. Good relative strength. Maybe. Or was that meant what I was supposed to go over? If I'm having an up day and a down market, that means that I can't have as good of an up day and an up market. It means that I have long puts in place, which will most likely prohibit me from having the big down days like the S&P 500. But it also means my rate of return on an up day will most likely not beat the market. And this one principle right here is the understanding where all those people that just make up money on the way down with long puts, but don't convert those into new shares, usually don't beat the market. The converting into, even if it's a single share of stock, that gives me from the bottoms, right? That gives me from down here on the bottom, that gives me 10% to maybe 30% quicker upside potential. And that is how I make up the difference in the up days. 1,000 shares, if they go straight up, I'm not going to make as much as the S&P. I'm not going to make as much as they will. But if it goes down and I add 300 shares on the up days from this point down here all the way up, I now have a 30% more profitable acceleration, maybe a 10%. It depends what percentage of shares I've added, but I have that percentage more acceleration to make up that difference now between the S&P and my shares. Guys, this is the single most important reason to understand why that first year you have to live with the process of collar trading. In all honesty, most times the first year you will not beat the market average with your collar trades. And every year thereafter, you're off to the races. This is the reason why I'm not a big spread trader. I've got a couple people that have given me, smaller $25,000 accounts that I'm probably somewhere between 32 to 35 thousand today. A great return for a year's period of time. But I've done that more through leaps. I haven't done it through spread trades because inevitably you get on a roll in spread trades, you then increase your contracts, you get your butt handed to you, and all of a sudden you're back down to doing nothing and having no gain for a significant period of time. Kevin, you guys have it so easy. If my job was so easy, then I'm not doing a good job. And when we had the big drops a couple weeks ago, when we had it through February, March, and April, I'll be honest with you, I was up at the European Open, the Chinese Open, the Chinese lunch, the European close. I mean, I was up 2 or 3 times during the night just checking futures. And if futures looked awful and China was down big, I was living off of 2 to 4 hours of sleep for weeks on end. Okay, what points, what inflection points? What point can I take a peek and see in look at these days from February. At what inflection point? At what support levels at 3,000? At what gaps down and gaps up? At what point do I add second sets of protection on? I mean, we're talking for 30 days, especially in through April, even though April was up. It was between probably our big day down. We're talking between 33.46 to 6 weeks later. Let's see when that was. Drop down, 33.92. So we're talking from the 19th of February to the 21st of April. I went through that 60 days with probably somewhere between 2 to 4 hours of sleep. Crunching numbers. If this support breaks at 3,000, how low will it go? Let's bring up charts for 5 years, 10 years, 20 years. Let's go back to the Great Depression. Let's go back to SARS. Let's go back to the swine flu. Let's go back to see what the market has done in the past. Let's find opportunities to relate or correlate like points in time to see how we're going to react. It was a miserable 60 days. A lot of us already had protection on going into earnings. Sometimes we put twice as much protection on. Sometimes we, out of the blue, came up with something like Under Armour. We have 49,000 shares of Under Armour. And at the beginning of the year, we had like 12,000 shares of Under Armour. We have a ridiculous amount of shares of Under Armour. But the stock fell from $20 down to $7.50. Talk about reference points. Huge amounts of reference points in there. Easy to see and justify from one to the next. Huge amounts of downward movement. And in all honesty, so Kevin, did you get it from 20 down to 750? No, but I got it from 20 down to 1250. And then we caught back up at 1250 and paid a lot down to the 750. But I missed the gap. There's a gap there I missed. Took a chance, didn't have crossovers, tried to outguess the market, made a mistake. It happens. And that miss sometimes can be catastrophic. It sometimes does not have to be. But you are going to miss. It's okay if you don't get it right every single time. That happens. It's what you do in real life when you are trading a stock. I wanted to go over. I just put you guys on pause. I wanted to bring up. Oh, I know what I want to bring up. Give me a second. Year to date, Apple, a single core position has made the accounts year to date. What does that mean? You guys, I want you to put your investor's cap on, right? Bill, looking for possibly a smart ass comment here. What does it mean to accounts if half of our gains this year are from one stock? Means you're a lucky SOB. Thank you, Dave. I expected Bill to say that to me. That's hilarious. What does that mean? And if you don't know, oops, sorry guys. If you don't know, type in a couple question marks. I get it. I don't know half the questions I'm asking either, so serves me right, right? There's a couple question marks. So I've got 2 said you screwed up or you blew it. Need to take some profits, too many shares for the portfolio, not balanced enough. That is also true. Or, as I'm going to state this in a different way, I've got 1, 2, 3, 4, 5, 6, and I should have 7. Where's my 7th at? That was probably GE. GE is probably 7. But I have 7 other core holdings that can be that one explosion next year. Really, for anyone that's in Under Armour, that is a huge explosion opportunity in your account. For anyone that is in Disney, that is a huge explosion opportunity in your account. Visa is a core holding, but it is not a knock it out of the books explosion type of position. For anyone that's holding Baidu, which is still down 6 or 8% for the year, is a huge explosion opportunity in your accounts. Ford is a huge explosion type opportunity in your accounts that because of Apple, we're beating the market, but this year we have 7 other opportunities that we're adding shares to, and we're giving ourselves the ability to have it be the next Apple next year. It's that simple. Let me pull up a chart on Apple really quickly. What a great chart. Drop in the year, added shares, and then the sucker ran. And then up here, ran into some little troubles, right? Did what, a 7 for 1, 4 for 1 split? I can't even remember. Amazing. That's an amazing run in a stock. For all intents and purposes, it basically had doubled. And it did a 4 for 1 stock split or whatever it was. I do not remember. And we took full advantage of it. Which means when you have a stock that looks like I do, That is not really an Apple stock. It's just getting back to break even. But we've added significant amounts of shares to Baidu. Under Armour tripled the share count for some accounts. Huge opportunity for an upside. Ford's been stuck in the doldrums forever, right? Just getting back to break even, still down for the year. Huge upside potential on Ford. Visa does not share that. Core holding, but it doesn't have the big side opportunities. Disney has it. Hasn't come yet, but it only has it because of its valuation. Huge upside opportunities. Someone just made a comment. Glad my advisor didn't have me in Ford. Thank you. That is someone that's taking me to the woodshed, basically, right? That's hilarious. There you go. Got it back into my plane. So that's only because you're going to have a missed opportunity there, Bill. And they did pay a 7% dividend, or gave you 49% of the value of the stock as they were falling down. Pretty interesting to look at it. If we are looking for a trade today, new trade, any Leap Boeing long call. That's assuming it doesn't have its announcement first thing tomorrow. But any Leap Boeing long call. If I was going to be looking at an opportunity, I'm not going to spend a bunch of money. January 23rd, maybe January 22nd. Let's take a peek. 210, I'd at least go up to 275, if not 300, 280 maybe. I might spend $25.15, $2,500 a contract, one or two. See if it'll have a big pop when the FAA announces that their plans are up and running. I could do a 300. Spend $2,000, $4,000. Maybe I'm doing dollar cost average, but my plan is not to dollar cost average. It's to make as much as possible, as quickly as possible. I might actually go out to a January 23. Boy, there's a lot of premium booked into them. Huh. Only goes up to 290. 280 is where it would be, and I would do it for, $40 limit price. It's a short-term play on an announcement. I would not be waiting for a pullback. It's an announcement. The reason why it is overbought is because we'd be a little late to the trade. It's an announcement on the FAA, which was going to, as maybe as early as tomorrow, but in the next 30 days, give them the 737. Get them a 737 approval to be flying. And the amazing thing, I'm going to put you on pause so I don't show any accounts here. The amazing thing is that we were to open on the 5th. We did a lot of dollar cost averaging on Boeing. We also did it on Visa. Pretty good timing. 1, 2, 3, 4, 5. Wow. We caught it just before the gap up. 155 trading at 210. Doesn't mean that the run is over, just means you're going to capture, you know, here's the wave. And probably the wave is up to 250. That is most likely the wave. And we missed from 41, we missed $14, but we're in it from here. And because of that, finally, we've got a bunch of contracts on Boeing that all look ridiculously positive. What are you doing? What do you have? Shares of stock we're just letting run. Some naked puts that are probably going to go up to 150 at the next opportunity. 196 January 22, 275 calls. Way overvalued on that one, right? But cost basis of 1324, and we've got 100% return. 81 330s, cost basis of 947, 1592. 60 January 22, 350 calls. Cost basis of 816, sitting at 1337. June 22, 235 calls. Cost basis of 1550. Doubled that one at a 55, excuse me. Some that are absolutely amazing for a couple individuals. What was I? Oh, that's Apple. Just so you know, it can be done. It just doesn't happen all the time. There are a couple people, well, more than a couple people, but I've got some contracts, about 48 contracts with a January 5750 or 5250 and an 8750 call vertical on Apple. The cost basis is $2.07. They're going to make roughly $30, right? Currently worth 29. We're just waiting for January 21. Just to give you a heads up, right? If you were to take $2.07, 7.5 cents, and divide it by 30, let's take 30 and divide it by $2.07.5. You're going to come out with a 1,445% return on risk. For the ones here at 67 cents, going to make $35 divided by 0.6734. This one is a 5,197% return. Now here's the difference, and I can only make it explainable once. This is not 1 penny that went up to $1. This is the market value. It's going to be $48,000. Let's try that again. That was awful. It's a market value of $48,000. It'll be a market value of, 108. That's not true either. That's $2 more on 32. 3,200 times $2 more, 64. We're looking at 112,500 right there. 48,000 up above. So is it possible to get 1,000% return? It is. A lot of us have already taken, in fact, for crying out loud, I think we took these off in thirds. Some of you might still be in here and we've taken off thirds. Don't worry, you're in a 100% risk-free trade. Some of you already have 100% return on it. And now we're going for the 1,000% returns. It can happen, but you know what the difference is? I'm not some jackass out there bragging about it. It's happened because of careful management, and because of that, we're going to get to get some ridiculous returns that are in the hundreds of thousands of dollars, not 1 cent that gets up to $1. It's not turning $100 into 1,000. We're turning a couple $100 into hundreds of thousands of dollars. Any questions for tonight? Maud, great comment on Boeing, but no, it's an event play. We're playing the event of again, the FAA approval. So I would not be waiting, even though typically you would wait for a pullback. I would not for today. What's going on with Baidu? Yet again, fabulous earnings, no love. They happened to report on the same day as IQ, which also had fabulous earnings compared to their expectations and analyst expectations. But since Baidu owns a third of them, they kind of got hit. You're going to hate the way I'm going to say this. I would expect a run into the end of the year. We talked about rolling puts out in time, but they were down as much as $5 today. Ended up only being down $3. The low was 141. So yeah, they were down $5 or some odd. Ended up only down $3.92. So they were down $7 at one point today. Nice little comeback. Fabulous earnings, top bottom, in line with their guidance. Made money on all their revenue streams, but because they own so much of Baba, IQ, Tenant or Tencent or whatever the other one is, they also are getting punished for their earnings as well. Notice how nothing's come about for their irregular non-GAAP accounting principles. Non-issue, not coming about because this is the one company that I think plays fairly. But that's Baidu, dang it. I mean, these guys trade at 280. There is massive upside potential on Baidu. No, I do not think I would be entering Baba, Tencent, IQ, Sina, Sohu. I would not do any of them right now. Great question. I just want to do it because they're looking at China. Well, so China is trying to take a social stance in the Asian Pac, where they're trying not to allow monopolies. I have missed Baba. I don't believe in Baba. But my biggest fear for Baba, even though it could have been a great one to be into, is the fact that they've just gotten their butts handed to them. And it looks like it's going to continue to get worse as they work on breaking up monopolies inside of China. And Baba's one. You could also say, well, isn't Baidu a monopoly? And of course they are. But it's really curious. They seem to be breaking up the monopolies where the owners or citizens are spending more time outside of China. So they were up at 319. Let's do some simple math. If I took 319 minus there today, 256, down 63 divided by 319, they're only down 19.7%. Fibonacci's are usually that what, 16.66. Let's do an interesting little Fibonacci sequence here. If I was going to put a study on, a display on, I was looking at these. Doing it in the wrong one. Hold on one second. Baba, I want to what I was trying to do, and I used to have it on here. I don't use it very much, as you can tell. I was trying to put the Fibonacci's on. I thought I did it through here, but obviously some things have changed. Although it shouldn't have changed. Fibonacci, let's do an Elliott wave. Doesn't look like it's here. So what I'm trying to get to is 23.6 is the most commonly used Fibonacci because it's the slowest or less that's down. I would be looking at a 23.6% pullback. You're only at 19.74. If you went Elliott waves, which I think are more accurate, Elliott wave levels. You have your 14.6 and your 23.6 right there. So there you go. You're looking at your 23.6 retracement that has that herd mentality. That is where you're looking at where you might see that retracement. And so what I was trying to do, and Bill's sitting here telling me, Bill, go to all studies and IET. Not seeing it. Of course, why is this not up? Bill is trying to tell me. No, it's not there anymore. That's why I just acted little. Not the Elliott waves. You used to be able to click on it and then go in there and draw your Elliott waves from the upside and trend it down. And it is not in here right now. Or I don't know. Things change all the time. And it's just not in here. It used to be really easy to grab it. But anyway, any other questions you guys have for me? Otherwise, I hope this was helpful. I hope that you would look to go ahead and getting some of these in. And I hope this gave you an idea to the thought process behind what I spend my days doing. It's definitely not easy. It wasn't meant to be easy. And this is where you're looking to do the best you can. Literally, you're looking at a January 22, 280 leap long call, or a January 23, 280 leap long call. And the thought process is start with 25% to 33% of the total invested capital you would want to invest in this position so that you can dollar cost average twice if you need to. What do you guys think? Pretty good to have some 1,000% returns in there to show you? All right, I'm stuck on myself. What can I say? Guys, have a good evening. I appreciate you being here. We spent a full hour today. Thank you very much. I wish you guys the best, and we will see you Thursday morning. Trying to stall for any more questions if they're coming in. Looks like there are none coming in. Have a great night. Talk to you guys soon. Bye-bye.